Welcome back, everybody, to another market day. I'm your designated inquirer. My name is Axel. Today is 9/8/2020. Let me get my mic a little bit closer here. All right, there we go. Cool. All right. Anyway, what happened to the market today, guys? Jeez, this is Tesla right here, and it dropped 21.06% in a single day. It is now its highest loss day ever. Considering that there's still a lot of people that own these shares, how many people are going to keep holding on to it, and how many are going to continue to sell off when you keep having more than 10% days to the downside? This is going to be very interesting seeing where people end up jumping the boat. Okay, it has not even been an incredible amount of volume, actually. So if we take a look at the volume here for the day, on these days, it's only been slightly elevated. If we take a look over here, there was more volume traded on July 13th than there was these past few days, and it's collapsed since the highs. It collapsed. It has collapsed 34% from the high, which I think isn't it more than that? I feel like it's more than that. Let's see. I feel like it's more than that. Let's take a look here. All right, 50249 is a high. $34 34% is the high. Now halfway would be 50%, would be 252. I'm not exactly sure that's right. Oh, because we're looking at the day, we're not looking at the intraday. Okay, let's look at the intraday. Ah, there it is. Intraday, there's the high that I'm looking for. Okay, so from the intraday high, okay, from the intraday high, we have gone to this moment 39.33%. 39%, basically 40% from the highs. That's an incredible amount. Oh my god. All right, I think this thing hits 50% before we see a bounce. I think we see 50%. I think we see 50% before we see a bounce, but this is just a guess. Okay, let's see what happened last time. Let's take a look and see what happened last time this thing went to infinity and beyond, and then thereafter what happened at every subsequent point in time. Okay, this is across many days. This collapse here was how much? Let's take a look. This collapse here was 30%. Okay, that was across like 3 days. Over here, it was over a prolonged period of time and probably reported badly, etc. All that stuff. Over here, let's take a look over here. Over here, in a single day, it wasn't even over multiple days. Over a single day, we dropped 20%. Okay, and if you look at a couple days later, basically the same, 20%. If you look at over a longer period of time, 24%. That's over a decently long period of time. 20% is about the average. This is substantially greater. This is bad. All right, let's take a look at. All right, that's pre here. This looks good, I think. That's still a very long time. So, all right, assuming that this is the top and that this is the damage that it suffered, assuming that there's a bounce and then a subsequent route, okay, what's the price What's the drop here? And how bad did it get? It got to 64% down. 64% down. Can that happen again? Maybe. All right. Now, what has been the subsequent run since then? Okay, since that low. Oh my God. All right. So the subsequent run from 68. Subsequent run from 68 has been 7 times. Basically 690%. 7 times. This has gone up 7 times. That's incredible. Oh my God. And now we're down a whole 40% in a matter of days. This has been basically since a week. In a week's time, we've come down 40%. That's an incredible amount of damage. That's impressive. All right. Now, again, it's not over yet because it's after hours and it's still going. It's after hours here and it's still going. This is ridiculous. So we can fully expect Tesla to keep sliding because nobody feels safe. Nobody feels safe under this, and they haven't felt like there's value there to hold on to right now. That's the danger of going into clear skies. That's the danger of going into clear skies. You don't know what to hold on to on the way up. Nobody put in little pins in the wall as they were climbing up for safety. They just kept going up without adding anything along the way. No supports along the way. Nothing substantial. Nothing where they've spent more than 15 minutes at a time at a given price range. That's the danger of going up so high so quickly, is that you have nothing to hold on to on the way down, which is what's happening right now. So yeah, all right, so we've spent enough time looking at Tesla. Let's take a look at Apple. Okay, let's take a look at Apple. Right, so far from the high. Okay, we're gonna take a look at just from the high, which was made during market hours. Okay, so far from the high yesterday, 20%. Substantially less than Tesla. Can it still drop more? Yes, I think it can. Case in point, it has been dropping at least a little bit after hours. Today was kind of interesting. We had a couple of companies report today. Lululemon reported today. Oh my God. After hours, it dropped. Basically, I think that's closing right there. It dropped 8%. That's incredible. Okay. So from $399, so from 400, it dropped down to 324. It has dropped a total of 18%. Is it done yet? I don't think so. Even though it beat earnings. I don't think there's something right now that companies can do to actually make anybody happen, because I think they're looking at the future right now, and probably that's what they're looking at, considering future guidance. Future guidance has been steadily declining in terms of how firm and how confident these companies are about the future. You've seen companies like Kohl's, you've seen companies like, Sears has gone bankrupt like 10 times. You've seen major retailers go bankrupt. There's a lot of damage happening, and that these other companies have not been able to absorb the people that have been fired. They have not been able to absorb the amount of money that has been lost in terms of financial gain. There's a lot of things that these high flyers have not been able to overcome regarding to the general economy. Now let's take a look at what our dear friend Mr. Meter takes a look at, which is the 20-year. Okay, this is one of the things. He looks at a million other things that I do not know yet where to find them and how to interpret them. A lot of them. Some of the things I do know how to interpret them, but I still don't know where to find them reliably. In any case, Let's take a look here. Okay, so on Friday we saw a pretty dramatic decrease in the value of the bonds for the 20-year bond. Okay, as is reflected by this ETF. The value in the bonds decreasing means that the yield was rising. Okay, and it also, people are selling bonds. They're generally selling them to buy some other asset that they feel like buying. From this morning into the open, there was a substantial increase. This substantial increase basically pegged the market to be able to had to do more with less. And that's why at every point in turn, when we would look at the VIX, today, even though it would drop precipitously and sometimes very strongly, the market would not go down, the market would not go up as quickly, nowhere near as quickly, even individual stocks. And what does this mean? It means that when people were selling, they were too scared to rebuy because they kept seeing decreasing prices. And as they tried to make their way back in during some sort of rally, what would happen is that they wouldn't have enough money to actually purchase and make a rally sustainable. There wouldn't be a floor being able to put down because there wasn't enough money to actually do that. Liquidity is actually leaving the market more readily now when the bonds are rising in price, because that means that they're buying them up and decreasing the yield. So even though yield went up a little bit today, still the overall amount of money in the system, in terms of investable money in the system, had decreased today. And so you saw still a net drop in the market, while let's take a look at the Nasdaq here. Nasdaq, yeah, we saw still a general drop in the market, even though there was a decrease in the bond prices because people were selling to try and get into something. The question is, what were they trying to jump into, right? That becomes the question. Where did they go? And I think the answer is in a couple places. One being, can you guys guess it? Gold. I think they were jumping into gold. Now let's overlay here. Compare with the TLT. There we go. All right, now let's take a look. So as TLT reached its peak, right? This reached its bottom, and as this started to drop, subsequently you didn't have the market. Let's go ahead and add it here just to be completely sure. We're going to add study. We're going to compare to the NQ. Okay, there it is. As this was coming down, this did not go up because, well, a couple things. One, that momentum is now solidly in the negative, but two, this money that was leaving the bonds was actually going into gold instead. So that's there's your explanation here. There are probably a few more assets where the money ended up going to, but I can tell you one thing: it wasn't Bitcoin. It was not Bitcoin. So let's go ahead and remove that. Okay, let's go ahead and remove this one too. Remove. Yes. All right, now what we're going to do is we're going to compare it to Bitcoin. This is gold, because gold, we're going to go ahead and add a quick study. We're going to go ahead and add /BTC. /BTC. There you go. All right, see? Today, gold outperformed Bitcoin. Okay, there was a point in time where they were basically running side by side because they're both pretty much considered like reflexive emergency assets, right? Generally seen as something that you could run to when markets are dropping. And today, more people, or there was more action moving into gold than into Bitcoin. Because even though there was a drop here, there was a precipitously larger drop in Bitcoin. Well, and they're both trying to recover at the moment. And we'll see how they function overnight, but as of right now, gold is outperforming Bitcoin. All right, now let's go back to, let's remove this, remove, and now we're gonna add, now we're gonna look at the Nasdaq. Okay, we're looking at the Nasdaq here. Now, let's look at the daily. Now let's look at volume. Okay, so the last time this dropped and we had a very large, basically, rout. Last time we had a very large rout, we had a very large amount of volume. If you see here, there's still less volume enacted in these last few days. Even though it has been larger volume, there has been less volume still at these prices than at these prices. Okay, there was substantially more volume executed at these prices here than over here. What does that tell us? It tells us that people are still not that scared yet. There's still a lot more people to sell, probably. So who's getting out right now versus not? Because here you kind of saw the same thing. There was an increase in volume, but were there points in time where there was more volume than that? Kinda, but we hadn't reached that yet, right? There was still more volume, but not more volume than there was here in 2017 even, okay? Where there was an increased amount of volatility, okay? Year 2017 into 2018, 2020, this is the year of the election. This is the year of the election, and here is prior to, I don't know, I'm not quite exactly sure what events transpired in this area where there would be this much volume over declining market share, etc. In either case, what do we know? We know we know that here and even here there was an increasing amount of volume, but the volume had not yet surpassed previous levels. So there's a run up here, a run up in volume. Here has started to actually decrease on today. So can that happen? Can you have a lull in volume while you're increasing? It doesn't. You can actually. You can. It can happen. All right. You can have a drop in volume while you are still dropping. Okay. This trend seems like it is thoroughly broken. Seems like it is thoroughly broken. All right. But there could still be more, because right now, as far as the Nasdaq is concerned, we are still at 11% down. Okay, this is still a healthy correction territory. This is not a sell-off to where people think that we're full on going into a depression. Not yet. Even though there's still a lot of things that are wrong with the economy, and that this coming October, as October looms and end of October, there's going to be a lot of layoffs. This is going to be a very scary and difficult October for a lot of families. There's going to be a lot of people that end up suffering. So start to pre-warm up your hearts right now, because there's going to be a lot of people that need charity. There's going to be a lot of people that need resources, and So keep that in mind, everybody, as we head into this fourth quarter, because it's going to be a doozy. So yeah, right now we're only at 11% down, and it's going to be a wild ride yet to come, because we thought that this long-legged candle to the downside would have been enough to deter a lot of people and make us think that, hey, there's probably still some bulls out there, and we're probably still safe here. It doesn't look that way, and we still probably have another 20% to go on Tesla for it to drop before we start reaching the historical values as to how far it can actually get. Can we go past that? Maybe we can. Should you start to nibble a little bit once we get to 50%? I don't know, and maybe. I don't know, and maybe. Okay, there might be, because that's the thing. I don't know how far it's gonna go. I don't know for how long and to what point in time. Because when we get to 50% from here, let's just run through it here. Here we're at 10%, right? Here we're at 10%, 11%, kind of like where we're at now. Okay, this is us at 11%. There might be a bounce somewhere along the way. Okay, at this point in time, they thought 15% was a pretty good area for a correction. Okay, still volume was high. All right, and it did not get higher after that. But what ended up happening is that there was less volume on increasing prices, which was, in a way, led to decreasing confidence that higher prices was the direction that the future market was going to be going. So it started to fall. Okay, so even though there are down days, and even though that there is less volume and it can snap back pretty violently, you still have to match it against the previous volume of, like, where we had, the most severe drop. And up to this point, there was no real substantial increase in volume and confidence at these levels compared to here, right? The confidence wasn't there, so I guess it decided to keep going. The market decided to keep going. Up until here, this is where we saw a substantial decrease in volume just in general, because there was probably nobody else left. This is probably what's telling us that there's substantially less people left to actually trade. At each subsequent drop, let's take a look here at what kind of movement we need in terms of drop. Let's go to properties here. All right, sorry about that. I'm all over here dealing with things that you can't even look at. All right, so here we go. All right, I'm drawing this line down here in volume to see what sort of drop in volume we need to see in order to get an inclination as to where the bottom could be. All right, so what we're looking at here is, let's go to properties, edit properties. All right, then we're going to say show label on hover. Okay, it doesn't really show us. How do we get here? 72%. All right, so we need a substantial decrease in volume for us to be confident that the market has finished off selling. Now let's go to where we are today. This is not 72% in drop in volume. Okay, so from this high point, from that high point, we need a 72% at approaching, because we want to be statistically relevant here. We need a substantial drop in volume to give us an indication that the selling has run its course, that there is nobody else left to sell, that there were enough people afraid enough to actually sell and keep selling, buying and then selling, panic selling, because they don't know where it's actually going to stop. So we have actually quite a ways left before we see the bottom here. This is probably it here. We'll see where bonds and where everything else ends up being also, but as of right now, statistically speaking, and for what we're seeing, again, only use this for information and educational purposes only, because I am not a licensed financial advisor. Please do not take the things that I say as recommendations and for you to decide what to actually do. Please consult a financial advisor that has a fiduciary duty to look out for your money, okay? I do not have that responsibility. Do not put that on me, okay? But I will do my best to call a spade, to call balls and strikes as I see them, okay? As best as I can. I'm going to be trying as accurate as I can, but you can only be so accurate where you're dealing with millions and millions of people trading on the market all at the same time. You can only rely on statistical probability so much. I cannot be 100% right. I do not claim nor think I can be 100% right. I think that is statistically impossible, and I do not want to even put myself into that type of like arena, because it's just not possible. Nobody should do that. And if they say that they are, run completely in the opposite direction, because it's not possible. Anyway, I cannot wait till Mr. Steven Van Meter comes out with his new video, because I will be there to watch it. And until then, I bid all of you adieu. Please like, subscribe if you enjoy the method in which I analyze the market to the best of my ability. And till next time, stay safe, stay healthy, and as always, take care. Bye.